Hey guys, welcome to the Syndicate, the show where we get the world's best angels, VCs on to talk investing, early stage startups, and all sorts of cool tech. Today we've got David Friedman. David's a managing partner at Panther Capital, and he's got a ton of experience in the space, fintech, as a mentor, and quite a lot of other things. So thanks for coming today, David.
Thanks for having me.
How did you get into this world? I like to get an intro real quick and then jump into the good stuff.
Yeah, kind of a circuitous route, I guess, but maybe not. Was an entrepreneur, always was an entrepreneur, literally from the time I was 12 and wanted to buy my own members only leather jacket. My parents didn't have the money, so I got a paper route. And I really never stopped working from that point. But as I got into the real workforce after college, started a couple of companies, and I realized I was really good at starting companies, fixing companies, changing companies. I just wasn't as great at running businesses when they were when everything was in place. Much more of a frenetic in my pace, and so when I start fixing stuff that's not broken, didn't really work very well. And so I kind of learned that by accident, and I sold a couple of the businesses that I was in, and I started dropping into some friends' companies and things like that. And that just led me to work with a family office that had me managing their alternative assets and just kind of dropping into companies, determining which ones were performing well, which ones weren't, rolling up my sleeves, getting involved because I had the ability to operate. And from there, it just kind of morphed into venture capital and angel investing with a specialty in what we call venture operator, right? So I'll be the guy that drops into companies within the portfolio that are having trouble, that need to be restructured. They're working towards an exit. Maybe the founder's over his head and can't figure out how to get there. But short stints, operating stints, 6 months, 12 months, and working on the investment side, that gives you a better idea sometimes looking under the hood as to what works and what doesn't. So we got to cherry pick investments, and that's kind of how it all came together for me.
It's always interesting. What was it like working for a family office?
Interesting. I happen to work for a great one. Some family offices are extremely dysfunctional, or at least usually the G1's not dysfunctional. That's why they put together a family office, because they realize that they need to have some structure. You get into the G2s and G3s and the dysfunction.
What is G1, G2, and G3?
Oh, I'm sorry. Yeah. So first generation. So the guy who makes the money is the first generation G1, and then the kids are G2, grandkids G3, and so on and so on. And so usually that initial entrepreneur has obviously what it takes to generate enough capital, enough wealth in one generation to be able to get to that level. And then sometimes the kids aren't chipped off the old block, as they say. So they put those structures in place. And I have a lot of colleagues who manage family offices where they're dealing into G3, G4, and just a lot of dysfunction, people calling about having access to the money and wanting to start this business or that business, and it could be a big adult daycare center. I was really lucky. I had a small family office in terms of the number of people. It was only G1 and G2. Large in terms of assets. Happened to be a real estate guy who did very well for himself in a single generation. They were a pleasure to work with. It was so much fun. It was collaborative. They kept me away from all the cash and marketable securities and all the Merrill Lynch stuff and all that kind of thing, and allowed me to be an entrepreneur and play with their money, and it was just fabulous.
How'd you get connected with them? How'd that opportunity start?
It was a referral. I was doing the stuff that I was doing informally. Somebody that I'd worked with said, you ought to meet these guys. I worked with them. They didn't even know it was a family office. They just knew it was a couple guys who were very big in what we call alternative assets. And he said, they have a couple companies that they're having some problems with, and you might be able to help them troubleshoot. And one thing led to another, and I realized I was dealing with a fairly well-to-do family. The guys that I worked with here in Chicago are G2s. The rest of the family's out on the East Coast, and it worked out. I worked with them for about say 7 years, and we still have investments together. I mean, we own a couple of restaurants together and a bunch of other things that while I was there, I always got equity in the deals. It was part of my comp. And so I continue to be tied to them in some of the investments that we have. And as they come to liquidation, maintain a great relationship with them. A lot of fun.
And yet you started your own fund. Where did the itch come from, and how did you decide it was time to go?
Yeah, I've just never really done well with authority. I've been divorced 16 years. My ex-wife's one of my best friends. But when I have to be in a relationship without anywhere to go and answer to someone and have that level of accountability, I think I just get uncomfortable. So after about 6 or 7 years, it just was kind of time to move on. I really liked the concept, but I wanted to be free to pursue things that maybe they didn't. And while I was captive to them, I didn't have that option, but they were great. They actually put me in business. They said, all these investments that we've been doing over the years, you know them better than anybody else. We don't really want to lose that. We understand you want to do your thing. So why don't we kind of continue as a consultant? And as you continue to do your things and ours fade away, then, you'll do that. And that ended up being a company that became called CFO Worldwide. So I was basically an outsourced CFO. That's what they did with me. They said, here's our money. And by the way, meet your new CFO. And that was my job for them over a period of 5 or 6 years. And I would make sure that the people they were giving money to weren't using it for private, airplane flights from Chicago to Milwaukee, because, hey, it's only $6,000, which is a true story. Didn't just make that up. And when you have to look at them and say, yeah, but a car ride is only $35 in gas and jet's not your money. So those are the kinds of things that I was doing. And CFO Worldwide became born out of that. Didn't have a lot of capital myself to invest, but I had the business model. And so continued to do what I was doing for other companies. As some of the investments started to liquidate and started to have more money, because we were getting to look under the hood of all these companies and helping them restructure and fix themselves, we got to cherry pick which ones we thought were worthwhile and which ones weren't. And we started investing small, and then eventually went to raise a fund so that we can invest a little bit larger. Stayed very, very small in terms of the companies that we funded, early stage companies, early stage tech, till about 5 years ago when I found the cannabis industry. And for the last 4 or 5 years, I'm now exclusively in cannabis. We still have holdings in all of our early stage tech deals. And I'm also involved with the group here in Chicago called OCA Ventures that we invested in through the family office. And they're big in the tech deals. But about 5 years ago, I got into the cannabis space. Thought it was really interesting for a lot of reasons, but the investment opportunity being the chief one. And for about the last 3 years now, I've been exclusively in that space. And the portfolio of non-cannabis assets I don't have much to do with anymore. I get called on a rare occasion, but now I'm focused on the cannabis space.
Talk to me about why you shifted the focus and why you thought, Jesus, I need to jump
into the cannabis space.
Yeah.
It wasn't really a why, it was kind of a why not. That's just how my life is. I've always just been a why not kind of guy. And
just a stoner statement for cannabis investing. I love it.
Yeah, it was, I'm just, I've never been I'm big on process for everybody else, but not for myself, right? So I jump into companies, I create these processes, I get everybody to follow it, I hand it off, and then I go on and I find a new one. And this was a new thing, It's actually an ex-girlfriend who I'm still really good friends with, and 2 of her sons have worked for me within the cannabis industry, and one still works for me now. And we were having lunch one day, and her son graduated college, graphic designer, moved to Colorado, and called home. Was like, "Hey, Mom, I got a job working for this marijuana company." And we were like, "What are you talking about, marijuana company?" But it had started to become legal and really started to become mainstream. And she just looks at me one day at breakfast and she's like, you got to figure out how to make us money in this business. And that was just kind of it. It set me off and I didn't look back.
So what type of companies are you investing in, and how has your thesis evolved since cannabis has kind of picked up?
Yeah. So we stayed exactly with what we knew, small startup, early stage companies, which was great because that's all you could find in cannabis then. So that part was self-fulfilling. And we knew it well, and we invested in a lot of early stage companies, small amounts, 25s, 50s, 100,000 maybe, and worked with them hands-on. I maybe probably have currently 12 to 15 companies within that early stage portfolio. Invested alongside a guy named Ramey Tritt, who had a very similar, small, couple $1 million friends and family investing in small deals in cannabis. We did a bunch of deals together. And as we deployed all the capital in our portfolio, I jumped in to run one of the portfolio companies that we invested in called MJIC. We sold a couple companies to them. The CEO kind of was taking the company in the wrong direction. The board asked me to step in because I had the experience restructuring, and I stepped in. We restructured the company, raised about $3 million in bridge equity from an underwriter out of Australia, of all places, to take the company public. And then I retired. It was my 49th birthday, and I just said I'd signed the contract on that day, the day before my 50th birthday. And I just said, you know what, I'm going to retire. And I went to Ecuador, and I stayed there for about 4 or 5 months. And I hooked up with Ramey, and he's like, I'm getting bored. Let's do another fund, but let's do it together. And I said, all right, why not? And so we did that. And in this fund, we've actually gone the opposite direction now. We were early stage and strictly ancillary. We wouldn't do anything that touched the plant. The risk profile was too difficult for us 5 years ago. Too much involved in touching the plant. And when we say that, it's pretty, it's a standard industry term, but it just basically means that you make your money in some way from an activity that requires a license to handle the illegal marijuana, THC, et cetera, et cetera. So we stayed with things like software, packaging, picks and shovels, like they say from the old days of the gold rush, so the green rush here. And then we decided that we would extend that, but that we would open ourselves to touching the plant because we felt we had a better risk profile. So we were going to move downstream and look at opportunities within the cannabis space that were further along, Series A or Series A plus. We were going to lead or co-lead those investments, looking for exits within 3 to 7 years versus 7 to 12 years, which is typical VC, because we think there's going to be a lot of acceleration on exit as the mainstream investment community steps into the cannabis space, which they haven't done traditionally, are just starting to do. There'll be a lot of takeout opportunities. So if we focus on companies that are further along, have traction, have revenue, we can have a lower mortality rate, maybe not as large of an exit. Maybe it's not a 50x exit, maybe it's 8 or 10x, but it can happen in a fairly quick period of time. So in that fund now, we've made 3 investments, later stage companies. We still have not made an investment that touches the plant, although we are looking at one right now. And I think we definitely will in this fund. And it evolves on a regular basis. Last week, Donald Trump agreed with Cory Gardner from Colorado that he was going to honor states' rights. And, the whole industry breathed a sigh of relief. I invented something called the Marijuana Index with a couple other guys, and it's still owned by MJIC and operated, and I watched the index go up and down in a period of a day, as the news churns out. And now institutional investors are entering the space. Constellation Brands stepped in a big way, $200 million in a Canadian company. A tobacco company stepped in. Scott's Miracle-Gro has been in for a couple of years now, has deployed about $500 million in the space. Yeah, they own Hawthorne Lawn and Gardening, and they sell lights and hydroponic equipment to the cannabis industry, and they're open about it. And more people are jumping in. And I'm actually, we don't have any, thank God, troubled companies in our portfolio right now, but I was contacted by a private equity firm that had a company in their portfolio that wanted to enter the space, the cannabis space. And so I stepped in to operate that company as the CEO and spin it off. They were in the lighting space, and they kind of accidentally found out that the lights that they had grew crops, including marijuana. And all of a sudden, marijuana wasn't such a terrible thing anymore because it can generate revenues. And so I'm doing that at the same time. So there are institutions now stepping into the space. Interesting time to be in the space, especially having been here for 4 or 5 years now.
When you are investing in such a targeted sector, do you have any risk or problem with overlap, competition, et cetera, between your portfolio investments?
Yeah, it's funny. I would say yes, but that's true of almost any venture fund. Pretty much any venture fund out there has a pretty specific, risk profile. For example, OCA Ventures that I used to work with, they're fintech, tech, and for-profit ed, right? For-profit education. So they're investing in those verticals. You're not casting a hugely wide net as a VC because you don't have that kind of expertise unless you're Madison Dearborn Partners or something. You have a couple of billion in assets, but 50 million, 100 million in assets, you got to stay pretty true to a specific vertical. So it's no different in cannabis. And yeah, especially in this space, it's really small. We're looking at investments. I've got an investment in my portfolio that's a data company. And we just made a second investment in another data company that's a competitor. There's definitely crossover, but I guess it's kind of the same thing as why you see a Burger King across the street from pretty much any McDonald's and a Wendy's, a block away. You're going after the same target audience. You're just increasing, the opportunity or lowering your risk, right? Because you're in two of the three players out there instead of just one.
Yeah, McDonald's made the demand for fast food significantly larger for everyone else. And now, now we're all fat thanks to them.
Yes.
So where do the exits come from the cannabis space? Is this going to be tobacco companies trying to buy? Is this going to be, where do you see that happening?
Yeah. So there really haven't been many exits yet. I believe that 2018, you will see a couple. I think the first exits will be IPOs in Canada. And there's a couple that I know of that are on the blocks right now. Either an IPO, I hate the reverse mergers, but that's the way that it's done a lot because it's hard to get a cannabis company through the approval process. Now Canada's going legal, so that may change. There are some companies that are on the Canadian Stock Exchange or on the marijuana index that have enough liquidity to be deemed an exit, but there haven't been any acquisitions per se that allow the company that's being acquired to freely trade that stock. They're still locked up. But I think what you'll see in 2018 is some sort of an either roll-up IPO that allows the investors to clear any lockups and have free trading stock on a stock that has enough market liquidity to actually consider it an exit. I think you'll also see one or two private equity transactions that are, cash transactions, maybe smaller, but I think that's probably the most likely exit. I don't see a tobacco company came in, and I forget their name, and they bought a hemp company. Constellation Brands came in as the liquor company, but they just made an investment in Canopy Growth up in Canada. So I don't know that there's going to be a takeout from an institutional investor of a pure cannabis play. Scott's has made a couple of acquisitions of hydroponic retailers, but not an actual cannabis company. You may see a software company like Salesforce, for example, step in and buy a company that we invested in called Baker, which is, they're often called the Salesforce of cannabis. I think they're slightly different, but people just kind of like to say what they know. So a tech company might come and step in and go, wow, you know what, this is interesting. We want access to this market. We're going to make an acquisition. I think one of those or multiple of those will happen in 2018, but I don't think you'll see a pharma company, a tobacco company, a liquor company, any of those companies make an outright acquisition for at least another 2 or 3 years because they play too much in the federal space, and that prohibits them from being in the cannabis space simultaneously. They lose contracts, and they've got licensing and FDA and all kinds of stuff that clashes. And anytime you're regulated by a federal agency and you step into the cannabis space, you put a lot at risk.
I got you. Interesting. Yeah. I want to jump into the lightning round now. How's that sound, David?
Sure. I don't know what that is, but I guess I can guess.
This is exciting questions where I go Zeus on you and throw lightning bolts and you have to catch them. So
sounds good.
First investment you ever made?
First investment I ever made. Oh my God, I got to think back. First investment I ever made was in a technology company. No, that's not true. The first investment I ever made was a company that was a manufacturing company that was going under, and we had a distribution company. It was called Band Creations. They made Christmas merchandise like snowmans and stuff like that, and we acquired them and integrated them, and it was the first investment that I really made, and it was a pretty large one.
Yeah, two biggest wins to date. Is it one of them?
Two what?
Two biggest wins to date.
Two biggest wins to date. I would say digital media company that I built and sold, and did fairly well on it, and a software company that I sold about 4 months before the .com crash, and proceeded to invest every single penny into another .com, and 9 months later lost it all.
Oh, well.
At a very young age, you figured, didn't even keep my original investment on the table.
Yeah, you dodged the bullet and got hit by the second one.
Exactly.
Damn. Any big misses, anti-portfolio, people you passed on?
People that I passed on. I cannot think of any opportunities that I've passed on that have made it big. Certainly not to date, but time's still yet to tell.
That's how it works. Give me a bold 10-year prediction about the cannabis industry.
10 years cannabis industry. I think 10 years from now, it'll be federally legal. It'll be regulated like alcohol and tobacco, and it'll be one of the top 5, if not one of the top 3 industries in the United States and potentially worldwide.
You think top 3 what would you say is number 1 and 2?
I think the top industries are agriculture, alcohol, tobacco, and pharmaceuticals. But pharmaceuticals, they break it down by drug. I think the cannabis industry is a $120 billion industry all in, and I think if I'm not incorrect, in the U.S., alcohol is maybe 150.
Jesus, I would have thought it was a much bigger difference.
Yeah, you would think so. And I don't want to be quoted on that because I haven't looked up the statistics recently, but I will tell you that cannabis will be one of the top 5 for sure.
No worries. If you got it wrong, I know Bill Murray was whispering something in your ear.
Yeah.
Distracting you. So what's overhyped besides ICOs?
Oh, man. Well, I think Bitcoin in general is overhyped. ICOs are obviously a spinoff of Bitcoin, but cryptocurrency is extremely overhyped. The only thing I think that's more risky today than cannabis is Bitcoin. Cannabis is illegal at a federal level and runs up against walls. Bitcoin's not only illegal, but you're looking to take the place of the currency of a sovereign nation. I cannot see the government, the Federal Reserve, allowing cryptocurrency to continue in the way that it has, and the ability for banks to be able to accept that and to be shut down, I think presents far more risk than cannabis alone.
You would say that, but at the same time, they tried to take away alcohol, and look how that went.
Yeah, you're right. But the government didn't operate a competitive business, right? The entire interest rates and everything that make our economy go are based on our currency, and if you have an alternative form of currency, how are you going to regulate it? That's the thing to me that I just can't see our government giving up on. You can create a secondary barter economy, which is what I think cryptocurrency is. And I can't live off of it. I can't go, buy a hotel room or a car using cryptocurrency. Maybe that'll happen one day, but I see that being difficult. You can't even buy a house for cash anymore. You got it. You can't walk into a bank with $1 million in cash and deposit it in a bank account. They have all of these standards around anti-money laundering and where did that money come from, and I just believe that cryptocurrency is going to start getting blocked. I mean, you can turn it into cryptocurrency, but if you want to get it back into legal tender and buy a house with it, you still have to have a bank that's willing to accept that. And unless somebody's willing to take Bitcoin to sell their home, I don't know that you ultimately will ever be able to, spend all that Bitcoin.
I'm not going to say I disagree with the competitiveness with the government, but there are sites now and ways for you to buy houses and cars with Bitcoin.
Are there really?
And the beautiful thing about that is it's also very trackable. So if criminals use Bitcoin, it's like the worst thing you can possibly do because you're leaving a paper trail a mile long. But there's a lot of different. It's a very interesting space overall. I think it's super overhyped in the short term, but a bit underhyped in the long term.
Yeah, and I'll say this. I hit 50 and I kind of made a decision that I wasn't going to learn any more new shit. And Bitcoin came along, and I just said, I can't learn this. I don't know enough about it to be as dogmatic as that, as I was just now. I think it's overhyped. I just don't see the government allowing it to happen, but I haven't dug deep into it enough. And I think a lot of people would say that about cannabis, right? And that was the last thing that I dug into. I just don't have the patience to dig into this new stuff. And so, fair point. Maybe it is a lot more practical than I think. So
we'll see. It will be very interesting regardless of what happens.
Yeah.
What resources do you go to? Podcasts, blogs, videos, etc., daily, weekly basis to stay informed?
I am so busy. I go on and off, but the guy I follow the most is Tim Ferriss, 4-Hour Work Week. He's got a blog. He's got a number of books. He's just a very concise, to the point guy. His podcast, everything he does is fairly short. I've got a short attention span and even less time. And so I read the 4-Hour Work Week when it was published, 12 years ago, and it became my Bible. And so following him has just always been easy. He's in my feed constantly. And then I read a lot of, I set up a lot of Google alerts for topics because it's the easiest way for me to keep current. So, I've got a Google news feed for probably 10 different topics that are of interest to me. I have one for music, one for marijuana, one for ag tech, things that are of interest to me. And then from that feed, every day I look and I see it could be a podcast, it could be something that kind of grabs everything on a daily basis for me.
Yeah, you said you're not learning anymore. It seems like you're still taking a decent bit of time into learning, and that's the important thing.
New stuff. I learn more about the stuff that I've already engaged in, but new stuff I'm staying away from, like Bitcoin.
The filter bubble. What is one thing we haven't talked about yet that you think we should?
Oh, man. I think the divisiveness of the country and the way that we have begun to implode over the last decade. And I don't know if it's because I've just gotten more mature or if we really truly have become more and more divided, but I don't even know what to go to for news anymore. I wake up in the morning and I turn on CNN and I listen for any story I can find that's pro-Trump. And then I switch to Fox, and see if I can find anything there that's anti-Trump, because everybody's so biased in one direction or the other. I just feel like the spirit of entrepreneurialism and capitalism and free trade has gotten lost in the rhetoric, and I'm just really worried about where we're going as human beings as this all unfolds.
Well, the U.S. political system is inherently broken from when they built it. They have a system where winner takes all, as opposed to just about every other free democracy. If your vote doesn't go to the winner, you have a backup ballot where your vote will go to. So when you don't have that, it always comes down to only two parties, because that's the only way your vote matters. If there's a third party, then the second and the third go, hey, wait a sec, we can compromise a little bit and take down the big guy. And when you have something like that, they either go together and merge, in which case they die, or they separate. That's the only way.
Right.
So, like a pair of shoes, it has to stand out. You get as much extreme as possible to be noticeable. That combined with the advertising and attention economy, where I throw the clickbait headline of Donald Trump just ate a dragon, and
Right.
I get a million clicks. And then, oh, by the way, it was a chocolate dragon. That's
right.
It's unbelievable to watch. And we went through the whole thing. I was in Switzerland, and people were asking me, like, is this a joke? What do you think about Trump? And that was months before getting elected. I was like, guys, don't worry about it. And it's just, oh man, was I wrong?
Yeah, my daughter was in Australia for 6 months, and then Asia. And when I went over there, it was interesting. You know, they at that time, they were just ignoring us. I think we think we're more important than we are in some instances. And then I think in other instances, we think we're less important than we are. When you make moves that unilaterally do something like acknowledge a state like North Korea without putting it through any kind of a political process, that's big. All of a sudden you're having direct talks, but then, you do other things that don't move the needle. I think it's a scary time to be an entrepreneur. I think it's a scary time to be a politician. I think the divide is getting worse and worse. I don't know how we unify, but I agree with you that the system's broken.
It feels a little like Rome before the fall, unfortunately.
Yeah, I've used that analogy before, and I think anarchy ensues at a certain point where the peasants rise up and become the majority over the working class, and the more and more you divide the middle class from the elite class, and they merge down to the working class, you get to a point where the numbers just are not sustainable anymore. And so I'm not predicting anarchy. I'm hoping that we're a civilized enough society to stave that off. But I think that there are elements of that in the way that society is headed that could make it hard to fend off if we're not careful.
Yeah, we'll see. AI is making things very interesting. It's like the pirate captain dilemma. How do you split the gold? Because if you don't give enough, your crew is going to mutiny and you're going to walk the plank.
Yeah, right, exactly.
David, where is the best place for people to find you? I know you're a super busy guy and you've got to run soon.
Yeah, I'm on LinkedIn, David Friedman. I spend most of my time running Vivid Grow, which is the ag tech firm that I'm spinning out for a private equity firm. David at VividGrow, VIVIDGRO.com is my email address. And I'm basically on email 24/7. So if you want to get a hold of me, that's the place.
If you have a cannabis company, you guys are looking to raise money, and you're a little bit not quite early, not quite late, hit up David. He's the guy to talk to. There's a couple of big players. I imagine he can connect you with all of them, and then you can go build an awesome company.
Yeah, sounds great.
Awesome. Thanks for tuning in, guys. If you've liked this, the syndicate.vc/iTunes, leave a review. And just wanted to make a quick announcement. I've said it a couple of times. I'm joined as the Chief Growth Officer of Coral. We're funding the 99% of companies that are unfundable. So check us out, coral.io. It's interesting. It'll be fun, and curious to see what you guys think. And thanks, David, again.
Hey, thank you. Appreciate it. Let me know when it's out, and I'll push it through our social media and stuff like that.
Absolutely. You have a great day.
Thanks, you too. Take care.